Hey guys, John Paulamy here, and this is uh, what day is it, Justin? It's Thursday, September 2nd.
Thursday, the 2nd.
Yeah. So we, as you know, guys, Justin Huhn has been on our the video series, the interview series, a couple times in the past, and he's all things uranium as far as I'm concerned, uraniuminsider.com. He's really been, I'm a generalist investor, and I look to people that are more specialized in particular areas, and I think he's the go-to guy that I've been going to for a few years now. And so with things really heating up recently, if you've been following the news, it was just kind of we've been trying to set this up for a couple weeks, and it was just fortuitous that we're on a day where over the last few days we've seen a lot of movement in the spot price. We're lucky to have Justin come on board and kind of tell us what's going on, or give us some insight into the new Sprott vehicle and what that looks like, and how that may affect the future. So welcome aboard, Justin Huhn, Uranium Insider. How are you?
Thanks for having me, John. Yeah, I'm a big fan of your channel, by the way. I listen every weekend.
Yeah, just to I appreciate that. I mean, I had to bifurcate things a little bit because I was realizing that some of my views were drifting into the financial stuff, so I split it up. But yeah, I appreciate the views. So having you come on board, like I said, we were talking before the show before the video started, and I was I mean, obviously, if people are following a couple things that I saw recently, obviously the Sprott vehicle is in full force now. It's doing what it's doing. I think another thing that happened today is I think he's a fan of mine, a guy I've known for many years, going back probably a decade. Harris Kupperman had a pretty good article about a flywheel effect that he saw happen in Bitcoin last year, last summer, and it may apply to uranium possibly, and I will get your views on that. But I think let's start at where you currently see the market. I've seen a couple of videos that you've been on. You seem to be a lot more bullish. And I'm kind of, I'm not one of these rah guys. I always like to try to maintain, let's look at rationality here. I know you're not a guy that rah stuff. You're this is what you do full time. You're in this market. You see what's going on. So what is happening? It looks like, finally we're breaking free of the Sprott vehicle has kicked in. So maybe you could give us a little brief overview of that vehicle, how it works, because in simplistic terms, I was reading the prospectus today. It can get a little complicated, what the ATM thing means, and then how you think that's currently affecting this market.
Sure. I know that you've talked a bit about it too, so this might be a little bit repetitive with the brief history, but Sprott announced in April that they'd be taking over Uranium Participation Corporation, which is a physical fund that was started back, I think it started in 2003, and they hit the scene in 2005. And when they IPO'd, that was one of the big signals to the market in the previous bull market, that there was financial players coming in to purchase physical uranium. Over the past few years, I would say that the fund stagnated a bit. There was a lot of frustration from investors earlier this year when the whole sector was really lighting up, and UPC was trading at like a 20% premium to NAV, to their net asset value. And in their prospectus, when they were trading at a substantial premium to NAV for a significant period of time, they were to issue shares to raise money to buy physical uranium, and they didn't. And now we know why, because this deal was being worked out. I've come to find out that the CEO of Sprott, Mr. John Ciampaglia, had been working on this deal for 3 years. And that just got done. The shareholders approved it early last month, I believe. Or no, I'm sorry, it's September now. This was in July that it was approved. And they immediately applied for an ATM, an at-the-market financing vehicle, which went live 2.5 weeks ago, and with the initial amount of $300 million. And basically the way that works is it allows them to issue shares into the open market when the volume is there, when there's a lot of buying volume coming in. Today was the biggest buying volume that they've seen so far. And today how many shares did they issue? They issued, I think it was, the total volume was something like 7 million shares today. and I think that they issued close to 4 million on the ATM, and they bought 800,000 pounds just today. So in 2.5 weeks, they've purchased 3.5 million pounds, and about 100 million has come into the fund through the ATM, or into the trust. They changed it from a fund to a trust. So when I say shares, I should be saying units, but same thing. They did a couple really smart things. They immediately did a reverse split to raise the price of the stock so that some funds could actually buy it just because the price of the stock went over X level, which is something he was kind of scratching his head why UPC never did. They offer 2 vehicles now, both on the TSX. One of them is a US dollar based vehicle. So US investors don't have to deal with the arbitrage between currencies. And it's an entirely different beast than UPC. They are very sharp, very aggressive, and the understanding from myself and most investors that are kind of thinking deeply about this is obviously Sprott has plenty of money invested in the space as well, as do their investors. Most importantly, so people who are investing with Sprott, and then people who are coming into the market or buying block shares via the ATM, they are also invested in uranium equities. And so Sprott has sort of created its own flywheel, in essence, that the money comes into the vehicle, they issue shares, they buy pounds. Sometimes, most of the time, it's been that day, or they raise that cash and buy the next day. There's only been one day since the ATM went live that they didn't buy pounds. But so now they've got 3.5 million pounds that they've bought since it went live. And I think they have close to 20 million in cash. They're just, so far it's beyond my wildest expectations. I knew it was a big deal when they first announced it, that Sprott was coming in, because it was kind of a solidifying of the theory of financial players coming to the market. And we started to kind of hear whispers about it, and a couple of funds bought 1 million pounds here, about 1 million pounds there. Family fund in Southern California bought 100,000 pounds. Just hearing it. And then when we heard that Sprott was there, it was like, okay, this is actually happening. And now we're just seeing the confirmation of that. So it's great to see from a uranium speculator's perspective, for sure.
Exactly. That was, you hit the nail on the head. I remember the participation. You're exactly right. They were frustrating people because it was like, why aren't they, their mandate was to go into the market when they had that premium and they weren't doing anything. And I know some of the smaller producers were picking up pounds last year or the last 18 months, whatever. And people were like, well, that's just kind of a fart in the wind. But this is a major deal. And I don't think people really understand the significance of what's going on. When you sit down, you think about what is the total value of the uranium consumed every year, if we want to call it 180 million pounds a year. I don't know what volume we want to use. I think that's fair to say that. And we look at, what the dollar volume would be is probably, I don't know, $6-7 billion probably a year. To run basically 11% of the world's electricity. And then I guess this is where I want to kind of well, before we leave the talking about the Sprott ATM, one of the things I would like to do that I'm confused on, maybe you can enlighten me and some of the listeners, is there's been questions that I've gotten about it, and I just didn't have time to dig into it deep enough with doing the reading and the understanding. When they go in and buy the pounds, they have as part of the deal, there's not a lot of this monkey business where they're just trading back between traders. They have certain time frames, I think, that are mandated that they have to take delivery. Is that not correct?
The time frame is actually not mandated in their prospectus, but for the most part, I think it's kind of just legalese, like giving them the widest variety of possibilities. But I spoke with John Chimpaglia this morning, and so far all of their purchasing has been with a 30-day settlement.
Okay.
So, which is why we're seeing the price move so aggressively. When all of the pre-production companies that were buying uranium earlier this year, like you mentioned, they bought 13 million pounds in a couple of months, and it moved the price $1 or something like that. So now we've seen true price discovery of what's really there for short-term delivery. And the reason that they're doing the short-term delivery, well, not only because it has the effect on the price that we're seeing, but it really flushes out what's out there and sitting in a can and is available for sale, rather than something that's kind of in delivery from production or is in the ground that can come out in 3 to 6 months. In Kazakhstan or in Uzbekistan, for example, they can move pretty quickly with the ISR production, and they're hoping to not have to buy out onto the curve very far, but they really don't know. It's really going to be dependent on the volumes that come in. So if the volumes keep up like today, and there literally isn't pounds for sale for 30-day delivery, they're going to have to go out onto the curve. But I think I think the sellers that are selling now are kind of waking up to the fact that this is happening, and they're going to be a consistent buyer in the market. And I think that they're just going to keep raising their ask on whatever they're holding. They've purchased from 8 different sellers. So they've had, I think, how many trading days? 10, 13 trading days since the ATM went live. And they purchased on 12 of those days. And out of those 12 days, it's 8 different sellers. So it hasn't been just one seller, flooding the market or whatever. It's been all over. So it doesn't seem that there's one particular seller that's sitting on a lot of uranium willing to let it go for cheap at short-term delivery. We're seeing what 3.5 million pounds has done with 30-day delivery. It's moved the price up, 20% in 2 weeks. It's substantial.
And so that's kind of, I guess the next question that segues into the next, discussion point is, I think this has happened so fast. It's almost like the blitzkrieg. So do we really know how deep the market is? Do we know what other sellers are out there? And then how does the psychology and sentiment change? Because if you are holding pounds and then you say, okay, well, people may be holding back, as they see the price go up. I mean, all these things come into play, I think, it's happened so fast. It's like the Germans breaking through the lines and, on an initial, it's like, okay, what's going on here? So, but I guess my question is, I know you talk to a lot of folks, and I don't want to give up your sources and stuff, but what's the sense from, or is there a consensus, or is it just really, we're just gonna have to wait to see what the increasing price drags out of the market, or do you already kind of have a sense, or folks you talk to, about how deep this market is, and could we see a fairly quick move higher and then maybe stabilize? What are you thinking?
It's so hard to say. I mean, from the people that I've speaking with, even the very measured and very conservative folks that are uranium bulls but aren't ever really out there, cheerleading, they're pretty astounded at how quickly things are moving, and very pleased with the way that Sprott's doing what they're doing. Well, we know that there's, about 1.5 million pounds that come into the spot market on a monthly basis, just from producers, from BHP, from Uranium One, from Orano, from the Uzbeks, from Itochu, and from a couple of other traders, from THK, which is Kazatomprom's trading house. So there's a consistent small amount of supply, but based on the volumes that Sprott's been buying in, I mean, that's insufficient to support that. So that's a really good point that you made. I've always kind of made this assumption that as we see rising prices, we'll see uranium come out of the woodwork. Inventory that's held maybe by Japan that they paid much higher prices for, maybe they'll start unloading it if they haven't have a lot of reactors come back online by the time that happens. But I think your point is a good one, that if the price is rising fast enough, we might see that supply actually tighten, in expectation that it's going to be $10 higher next month, or 3 months from now, or whatever it might be. But I don't think anybody really knows how much volume is going to be out there and at what price. But it doesn't seem like there's much belief that there's a lot of standing inventory that will come into the market at higher prices. So I think what we're seeing now is what is actually out there, and buying further out on the curve is really just going to be incentivizing production. And so Sprott, from my understanding, is really going to try to strike that balance between growing their AUM, maintaining, a highly liquid vehicle that's growing in size, continuing to have pressure on the spot market, but also trying to buy for as fast a delivery as possible to not have to actually incentivize, bolstered production, especially from Uzbekistan and Kazakhstan, which would be the most likely to start doing that. So it's very difficult to predict, but at this rate, I think we could see a pretty rapidly rising spot price, and we very well could be kind of at the bottom of that parabolic curve in spot price, like we saw in the previous market, where you had the spot price going up, a couple of dollars every week for 2 years. I think that's entirely possible.
So that's good to get into it. One other question I had about the what is I mean, this is happening in the context of the fact of not even having a U.S. listing yet. So what is the time frame that you understand for the U.S. listing for this vehicle?
He was saying, well, when we spoke with him about it 6 weeks ago, he expected it to be about a 6 to 9 month process to get the New York Stock Exchange listing by the time they file. I don't believe they filed yet. And so we're thinking that's probably a Q2 story. We expect that there's probably going to be some pushback, primarily from utilities and the lobbyists that the utilities have in their pocket. I don't know what angle they might take. Obviously, if you think of it as a free market, they're welcome to come in and buy uranium as well, and they're welcome to produce uranium. And there's nothing stopping them. There hasn't been anything stopping them, but they also could possibly make the argument that now this critical mineral, that's necessary for national security, is being cornered by a financial entity, and we're going to be the ones that are going to be victimized by it. So I expect that they'll take that angle, but I also do think that Sprott expected that angle to be taken as well. And I don't think that they would be going through this process and spending 3 years to corner this deal in expectation that they wouldn't make it possible. So they already have 3 other physical trusts on the New York Stock Exchange. It's highly likely. I think it's probably in the 90 percentile that it gets done. But just from what we're seeing so far, I'm actually not even that concerned whether or not it gets done. It's amazing what they've been able to do on the TSX and the volumes.
Yeah, I mean, at this point in time, even for a retail investor, it shouldn't be that hard to, I mean, there's so many different vehicle or entities available to trade worldwide, especially Canada is not really that hard to trade. So
right.
Yeah, I don't see that being a big problem or a stumbling block for people. But
yeah.
So did I read somewhere now before we get into the real dessert section, which is the fun part? I just want to cover some of these other things, which is so what is I think I read an article that I have read, just like you said, there was some family office or this fund over here, and I know there's some guys that played this in the last bull market the same way. So I know there's other entities out there taking material off the market, but it's not in this type of volumes. But I think I read something like there was some other folks contemplating doing something similar. I don't know if it was in Europe or something, like there was other funds being contemplated. And then what is Yellow Cake going to do now? Are they just going to sit there and keep doing what they're doing? Or are they going to be incentivized to maybe switch up and then what does Cameco do now? I mean, because they're basically, I look at them as kind of like a hedge fund, a uranium hedge fund, because they don't need uranium getting away from them too fast. I think with their book the way it is right now, and I don't know what your thoughts are on some of those, because I think a lot of institutional investors will just go straight to Cameco, and that may not be the best way to play this. So I don't know. I jumped around. There's like 4 questions in there, but feel free to answer any way you want.
I'm not sure what Yellow Cake's going to do at this point. As far as I know, they're maintaining their deal with Kazatomprom to buy $100 million worth of uranium every year. It would make sense, in my opinion, if they also did something similar and filed for an ATM and started buying on the open market as well. Clearly, it's having an effect. Cameco, I think, is in an interesting situation now. They don't need to buy a lot of uranium still. I know that their order book has been thinning out, and some of their purchases are actually purchases from their JV in Kazakhstan from Inkai. But I do think for their deliveries this year and maybe the early part of next year, they were still relying on buying in the spot market at least a few million pounds. You know, they've always said they didn't want to be the buyer of last resort. Well, now they've got a buddy to compete with. And you know, and they can buy from the spot market is, you know, up to 12 months delivery. So it's possible they can still buy some pounds, but you know, that 12-month delivery is not going to be cheaper than the short-term delivery. So well, maybe in this environment it would be for a brief period of time. Yeah, they're in an interesting situation. I think that clearly this is going to get the utilities' attention, and it's likely that they'll get into mid and long-term contracting faster than we would have expected otherwise. So in that case, it's probably good for Cameco. If we hear from Cameco in the next couple of conference calls that they've signed, you know, another 50, 100 million pounds in long-term contracts, that's a good sign. That means they're probably thinking about MacArthur, you know, which even if they announce that, let's say next year, we'd still not see full production on that until 2024. So it's not really going to affect the market too much from a supply demand perspective. And for all we know, this price spike and speculation could be over by the time MacArthur River even comes online. But yeah, we don't really know what we don't really know how the contracts are going to be working out now. If I'm a utility, a fuel buyer, and I'm seeing Sprott come in, I'm seeing these price moves in the course of just a couple of weeks. And I know not only am I likely still receiving contract deliveries that I'm paying a spot reference price on, or at least a partially, you know, 50, 60% spot reference price, but I'm also thinking about my future supply and not really wanting to pay a 60% spot referenced contract and sign that type of contract. So while I think this is going to force utilities to come to the table sooner, I also think that they very well might not be willing to sign a higher percentage spot reference contract and expect, you know, in expectations of a much higher spot price in only a few years. So curious how that's going to turn out. It's possible once we get up into the 50, 60, $70 uranium range that some of these developing companies will sign fixed price contracts. You know, I have a feeling like the bosses and the Vimis and the Globals and things like that, you know, that they might sign 2025 pounds at $65 fixed. You know, they'd probably be happy with that, especially like Global with their $35 PEA. Boss has their ISR. They'd probably be happy with a fixed price contract of that. And that would protect the utilities as well if they think that it's going to be going much higher. But obviously that's a gamble to make a fixed price contract. So a lot of questions out there. I don't have the answers to all of them, but I think it's clear that the financial players are here and they're doing what they're doing, and I don't think they intend to slow down.
My observation, just to talk about, not to leave Kazatomprom out of the discussion, my impression has been that since they have been more of the more maximize the asset attitude, let's call it that, instead of the old Soviet 5-year plan attitude, they seem to have been, the fear seems to be dissipating that there's going to flood the market. I mean, they're actually, I think they reaffirmed, or even the growth is not going to be there that people thought. I mean, just for several other reasons besides just if they're trying to maximize their position. I mean, they've had COVID things and supply issues with sulfuric acid, all kinds of things. But I mean, what's your impression of Kazatomprom over the last, you know, year or 2 years, and what do you think? What are you hearing, like what they're thinking? Because you had to talk about them, they're 40% of the market, or whatever they are, 40, whatever they are. So
yeah. Kazatomprom, yeah, you're correct that they did confirm that they do not plan on increasing their production out through 2023. And their take is that they're claiming they're not getting the market signals to do so. Of course, did that change in the past couple of months or in the past couple of weeks? I don't know. I tend to believe that there's also more going on there for a couple of reasons. One, we haven't seen them increase their investments in their well field development in terms of actual spending. So, you know, at least that speaks for the next 18 months and beyond. Really, those ISR wells, they peak at about 18 to 24 months from the well field development. So if they're saying 2023, we know they're not putting the money in the ground right now to increase production. It's also generally expected that, you know, these ISR well fields, they usually go after the low hanging fruit first, and there's high grading, just like in the oil business. And So we do expect that even if they did want to ramp up production, they definitely could, but it's not like they're going to ramp up 20 million pounds a year and that'll be indefinite production. You know, they ramp production, they hit their overall peak pretty quick. And then there's a long slide down kind of at the end of this decade and beyond. The other thing that was really curious was the conference call for the second quarter, where there was no mention whatsoever of their CEO stepping down. And then was it the next day or 2 days later, they announced that he was stepping down, and they didn't even discuss it in the conference call. It was really quite strange. And it was a very short time frame too. It was like, yeah, he'll be out in 7 days or something. It was very odd. So that's usually not a great sign, especially kind of at the forefront of this bull market. So I don't really know what's going on there. But I mean, Kazatomprom, they are and will remain the largest producer. They're the most consistent. They're very reliable in their production. They're very reliable in their sales. And they're obviously going to be a major player here, you know, going out into this bull market. But as far as will they ramp up? I mean, they just can't ramp up fast enough with the prices moving in this way. And even if we get into the 40s and maybe even 50s by the end of the year, and they start putting money, well, that's winter time. They do very little wellfield development in the winter, but as soon as they could, let's say next spring, start pouring money into wellfield development, that means mid to late 2023 is when we really start seeing the production from that effort. So it's not that it's irrelevant. It's just that it's not a market killer, in my opinion.
Interesting. And I agree with that. So let's get into some of the porn that people want to, and what I'm saying on that is, like, I saw, like I said, I've known Harris Kupperman. He runs a hedge fund. He's all over the internet, or the FinTwit, and he made a lot of money in the last uranium bull market, and he kind of took a position, I think, about a year ago, and then dumped it because it really didn't do anything. He's not a big, he made a lot of money in junior mining earlier in his career, but he swore it off just because, you know, it's a horrible business, as you well know. I mean,
Right.
It can be good in, you know, certain periods, but it's not typically a very good business. But he came out with a pretty good article on his website. I think it actually got picked up by Zero Hedge. I saw it on there, and it's been flying around FinTwit. But as we were talking before the show, I mean, he had a similar thesis last year with the Grayscale Bitcoin Trust situation, where it kind of developed a flywheel. They were hoovering up all of the Bitcoin. And I mean, his thesis seemed to have played out last year with Bitcoin, and you know, made a lot of money and then dumped it. And he kind of came back with a similar type thoughts about, if you want to call it the flywheel, where, you know, the Sprott thing causes, you know, price action to the upside, which creates more interest, which creates more funds flow, rinse and repeat, and it just you know, then we know the story. And yeah. So you know, I keep going back to this, where I think it's possible to really have a really wild move in this thing. And I'm normally fairly conservative, but here I am watching natural gas at $4.60 an MCF. Here I am looking at thermal coal, which is supposed to be going away at, you know, 10-year highs. I'm looking at 10-year, 13-year highs in Gazprom's stock price. So anything's possible right now. And this thing has been beaten down for so long. And I look at a chart. When I look at a chart, I pulled up a 20-year chart the other day to encompass the last bull market. And I'm looking at this huge bowl, you know, that we are basically emerging from now, this long period of consolidation breaking out. And I'm thinking to myself, would you really want to be short that chart over the next, you know, year, 2 years, 3 years? And, you know, the answer is obviously no. So let's kind of get into that, because that's kind of like the big flavor of the day. Sure. You know, with the kind of funds flows we're seeing. I think there's a kid, I don't know if he's a kid, a guy on, he's actually created a little Google Docs thing that's tracking all the inflows and everything. I saw him. I'll try to find it. Alex
Weinstein. Yeah.
I don't know how accurate it is, but it seems to be pretty cool. I'll put that in the show notes. But there's interest is building, I guess what I'm saying, you know, tremendous pressure is building behind this. So, and then then I'm going to just, you know, segue into FinTwit obviously is very incestuous. You're in it. We're all the same guys talking to each other sometimes. But if this thing gets out to the Wall Street bros and some of these other things, I mean, I think Dogecoin still, several, billions of dollars of value in some of these companies. I mean, you get a funds flow into this thing into a market that's currently maybe 180 million pounds at $40 a pound. I mean, that's still $8 billion, $7 to $8 billion. Nothing in the scheme of things. And if 20 or 30 or 40 billion came into this thing by the end of the year, which price action draws attention. So then you create that flywheel. I mean, what's your thoughts on something like that? Like I said, this is pure speculation. Anybody that's listening, this is not what I think I'm expecting necessarily to happen. I don't think we have any clue what's going to happen. It's unknowable right now. But what are your thoughts on something like that? Because your mind goes there. You start thinking, this is not a big market cap market. And Doug Casey, a gold bull market is the Hoover Dam going through a fire hose. A uranium bull market is the Hoover Dam going through a drinking straw. So thoughts?
Yeah, it's absolutely true. There's just not that much to buy. There's 60 something stocks right now. And when real money, which we have not even seen yet. I mean, this is not real money coming into the space. This is retail hopping back on. I do think there's more retail involvement right now than there was in the past 2 weeks, which I sort of thought that we were seeing because the sentiment in retail was still pretty low, even as Sprott started to buy, but the stocks were starting to recover. So I sort of had the theory that was some potential smart money institutions actually doing some buying in the open market. There's so many separate flywheels that are all connected. It's funny because we have a section in our monthly letter every month called the Flywheel Effect, and we usually attribute that mainly to the ETFs. Because as the money that comes in or out of the ETFs, they issue shares, they buy back shares, and they expand, they contract, and it has like a secondary effect on the whole sector for the most part. And the cool thing, I don't know if it's a cool thing, but the crazy thing about the move that we've seen this week and that started last week is the ETFs really hadn't, there wasn't much share issuance happening until yesterday, and today a little bit URA started issuing some shares. So we're going to see, after these things are up 25-35% over the course of 3 days, the ETFs are going to start nibbling away at these things, just hitting the ask, wait until the end of the day and then they just hit the ask. So that's one flywheel with the ETFs. Another one is just like you mentioned, Harris Government's article being picked up by Zero Hedge, and then that gets shared here and it gets shared there, and more people hear about it, and it creates kind of like a snowball there. And then obviously Sprott is kind of a flywheel in and of itself. It's growing its AUM, it's bringing in more money, it's directly, and to your point about the uranium squeeze thing that's being passed around, and the silver squeeze that happened or tried to happen, and with these short squeezes, it's a very real possibility that can happen here when they start to recognize that means actual buying of physical uranium when you buy this stock. So we've got multiple flywheels happening here, and I definitely don't think we go up in a straight line. And I would say probably the biggest hurdle that we're going to have most likely is some type of broad market type correction. But that's also very difficult to predict because the Fed just keeps going for it, and the thing just keeps climbing. It's just this melt up, this never ending melt up. And it's been a painful thing to try to short it, which I haven't. But, there's probably going to be a time to hedge, maybe a time to trim if this thing gets really wacky before we have a correction, let's say in the next 3 to 6 months or something like that. But generally speaking, these types of markets get really crazy toward the end. And so I think that weathering the storm, if we do get a big broad market correction and coming out on the other side of that for hopefully multiple years of commodities run, uranium included, is kind of what we're shooting for here, what we're along for the ride for.
Yeah, I concur. And I mean, a couple of things that you said there that I just kind of want to expand upon. One of the main questions I get, especially from a lot of new subscribers, I'm a generalist, obviously. We have a lot of things going on in our newsletter. Probably only have like 4 or 5 uranium names, but they've done fairly well for us because obviously we're in 3 years ago. But I remember talking to Trader Ferg. We were actually, while we were talking, buying Paladin at like less than 10 cents or something while we were on our call one day. I mean, I don't know what's trading at now, but anyways, like 50, 60 cents, something like that. Anyways, one of the major things I get from people is they see how, because I'm obviously the market is way overvalued. I'm talking about in general now. We had a really big move on the reflation trade, I call it. You know, I've kind of put forward a thesis that I thought that we would have this reflation trade, and I thought that the Fed would kind of pull back, and that would cause like a deflationary scare early into the growth scare early into next year. But I'm like you, I don't see them taking their foot off the pedal at all. And I guess that's one of the things I get questions a lot as well. Is it too late if I get in? I mean, all these things are unknowable, but you know, I mean, we can sit here and say, you know, I've studied history. I put in a video, you know, talking about like Japan, you know, it got to a cape of 100, you know, and when it was at 50, it was overvalued, and it was at a cape of 40 was overvalued, but still doubled again. So, I mean, it was just like, you don't know how crazy some of these markets can get. And I mean, to steal another Harris Kupperman term, you know, Project Zimbabwe is in effect. I mean, if the liquidity that's really powering the general market and a lot of these asset bubbles is continuing, I mean, at this point, can they really stop it? I mean, it's, you know, you're trying, I don't want to say there'll never be a correction, because there will be. And we just had one over the summer in commodities. You know, we had a little, so-called tough talk back in June. And, you know, I was looking at all the, my tracking software that tracks everything. It's like, you know, basically didn't do anything, went sideways or down for the last, you know, couple months. And now looks like the commodity resource thing's starting to, in general, not just uranium. Right. So I would tell people, you know, you're not going to time these things perfectly. You know, if you didn't understand the thesis 3 years ago or 2 years ago or even a year ago, and it's not completed its journey. I pointed to a chart. I did a video about a couple months ago. I think I showed a chart of like Forsyth or one of these companies from the last bull market. And I showed the fact that in its journey over the 4 or 5 years that it basically went parabolic. I mean, there were like 3 or 4, 50% or more corrections in the stock. So those would have been times that if you didn't understand what was going on fundamentally, you would have sold. And then and this is the question I ask people, after you sell, because you're anticipating this crash, when are you going to get back in? What's your trigger? Because what you find is people are, well, it'll go lower. And then the next thing you know, the train starts leaving, and you're waiting for this to come in so you can buy back in. So I think one of the things I tell people, and just gets your view on this, because a lot of people ask this question because there's, you know, constantly new investors and speculators coming in. I say, look, if you want to do that, buy yourself like a core position, maybe, and that's something you're just going to try to ride the whole thing until the fundamentals change, whatever your thesis is on uranium. And then if you want to trade around that with some other capital, but I just don't think you just want to be completely trying to trade this thing in and out. I just think that it gets too difficult to do that. I mean, what's your thoughts on this? Because I think this is going to be a multi-year situation.
Yeah, I'm in the same boat as you. I mean, I really think it has a lot to do with the individual and what they're. If you're a really, really sharp and astute technical trader, and that's your thing, then you know, obviously go for it. For me, I feel far more stress, or let's say in investing pain by missed opportunities than I do by weathering drawdowns. I don't know if that's a strength or not, but when things are really volatile and they're selling off, it doesn't really bother me that much. And maybe that's because I have a comfortable position size. Maybe it's because of my level of confidence from like doing this every single day. But you know, anytime you sell, you're creating a tax event. That's one thing. And then if you're selling that's based on a technical signal, then you have to follow some other technical signal to get yourself back in. And if you're selling simply because you think it's going to go lower, but the fundamental situation hasn't changed or is in fact improved, as we had this summer, how do you decide when to get back in? And things move so fast with uranium in both directions, but especially when they go up, just because, like you mentioned, it's such a small market. So if you hadn't timed trading in and out over the last couple of months, and you just, turned off your screens in June and just turn them right back on, you're basically flat or even up, 5-10% from the highs of the summer before the couple months of selling off. So I don't try to trade this market. I basically take a buy and hold approach. I haven't put all of my investable wealth in uranium. So if there's something that comes along where there's a 20 to 30% sale and I want to add, I do. So I'm not ever actually all in. I have some diversification. I have some oil. I have some precious metals, which has been a little bit painful. I have a little bit of cryptocurrency, but it's mostly uranium. But again, I'm buy and hold and buy on weakness until I see a reason to get out of an individual company for an individual company reason, or a sector wide situation that causes me to trim or get out of everything. But for the most part, we treat individual positions individually, and I don't recommend trading around these things just because the volatility is so great. And you have to time it really well to even take advantage of that dip, considering that you have to take a tax event on the sell. So it's tricky.
Yep.
Some people do it really well, and more power to them, but it's just too stressful for me. I don't like getting out and then feeling the pressure to get back in at a cost that made my trading out of it make sense.
Exactly. And I think a lot of that comes from, like you said, you kind of didn't say it without, you said it without saying the word, but I mean, if you really, anybody that's just listening to this conversation that is like, yeah, I've saw the price movement and I was on Twitter and it looks like something's happening here. You really have to do some homework to understand. I tell everybody this: don't just buy these things or get involved in any of these markets unless you really know what you're doing. Write it down, do some research. I mean, this thing's not going to run away. I mean, you can go on about investing theory and stuff like that, but everybody, like you said, everybody's different. But if you have the conviction in the thesis, because you understand it, because you've studied it, because it makes sense to you, the supply demand dynamic that we've been talking about ad nauseum for few years is now, being lit on fire with this catalyst of this, potentially with this vehicle. Then you don't just do it because Justin and John said that's, sounds good. You really should understand it. And I think that gives you the conviction to sit through like this summer and just watch, things just melt because, everybody's on vacation. Basically, the thesis didn't change. The reactors are still being constructed. There's no mines being constructed. Nothing really changed except for probably liquidity kind of dried up. And, there was no news, if you will, to drive anything. So that would be my view on this, on the same thing. I mean, it was the same thing like in some of the runs we've had in some of the coal stocks. People were like, well, coal, it's up, I mean, what's your, if something's trading at an all-time high, the underlying product, at least, why are you buying it? Because somebody on Twitter said, or because you actually understand what's going on. So anyways, yeah, enough said on that. So I kind of wanted to drift into a couple questions, not get into individual stocks, because I'm not a believer in giving away things for free. Anything worth doing should be paid for, in my view. And there's a lot of cheap Charlies out there, but I would like you to talk about, in general, if you would. I get a lot of questions. I'm not as big on this as a lot of people are. Some more famous people that talk about this. Jurisdictional risks, obviously they do exist, but I mean, how much does this play into what when you're analyzing like we talked about, there's like 60 some odd companies that are, you can buy. They're not all investable, obviously, but what's your methodology? How do you go through this list, and how do you determine what's investable and what's garbage, and what goes into that? It's jurisdictional risk, I'm sure capital. I mean, I don't know what's your way of doing things.
Sure. I mean, we're mainly looking for a mix of a number of factors, but obviously just trying to beat the market, trying to generate some alpha over, let's say, simply buying the ETFs, which is totally fine for anybody who wants exposure but doesn't want to do a lot of work and take the risk of the individual stocks. But we recommend a basket of 10 positions, and we really like companies that can further their projects and grow as a company without the uranium price moving. So companies that have individual company catalysts, we really, really like those companies. There's a lot of companies out there, and not to knock them, but there's a lot of companies out there that are just sitting on an asset that was proven out a decade ago, and they're just waiting for the uranium price to rise, and they're not staying in the news flow. They're not remaining relevant in the eyes of the market. And so that's one big thing for us is companies that are doing things. We really like that, and are ideally doing them in a way that's not too dilutive to shareholders, because obviously action, typically in the mining industry costs money, and dilution is always part of that game. But if they're doing something that's really accretive, then it's something that you can accept. Jurisdiction, we like projects that are in jurisdictions that have some history of supporting uranium mining. I think we don't really like to make gambles, I guess, in any way, and jurisdictions is one of them. So we don't like to gamble. Personally, we don't really like to gamble on explorers. Although an explorer that's well run, that makes a discovery during a bull market, is probably going to be amongst the biggest winners during that bull run. So that's, but it is more of a gamble. You don't know if they're going to hit, and you really have to do the work to find out who's on that team, how long have they been going after this thing, what have they figured out so far. We own a couple of explorers that have already made discoveries, or have something unique about their projects and have a team that we really like. But in general, we don't really go after the gamble type explorers. We take a pretty close look at share structure. We think that that's something that is widely overlooked by investors, and it's not it's not an end all be all. Like, there's definitely some good companies that have higher share counts, especially on the ASX, because it just seems like that's kind of their thing. So it's not just the share count, but it's the ratio of outstanding warrants and options to the outstanding shares. And so there's a company, I don't want to mention any names, but there's a company that we sold last year, about 16 months ago. And the company hadn't progressed in the way that we thought, but we also kind of started to recognize, I remember what it was. They did a raise that was so dilutive, that was so poorly timed, with full warrants. And then shortly thereafter, they issued a bunch of options to the managers. And we came to realize that 50% of the outstanding share count they had in options and warrants. So for example, let's say they had 500 million shares outstanding. They had 250 million outstanding options and warrants. And in a raging bull, the fund flowing into that stock will kind of plow through those options and warrants, and it'll help to cash up the company. But if the buying pressure isn't significant enough, it's a really big overhang for a company a lot of times, because you have the warrant holders actually doing like a gypsy swap, selling the common share to buy the warrant, or to exercise the warrant. And sure enough, that company that we sold has really underperformed since then. And it's not because they have bad management team necessarily. It's not because they have bad projects. It's just, I really believe that share structure has really been a drag on the stock price. So we take a good look at that. And then obviously we like to look closely at the management and, insider ownership and what the management has done in the past. And do we feel that they're genuinely looking out for shareholders? And there's some exceptions to that. We own some companies that have, one company in particular that has just a killer asset that it's a must own based on the asset itself. And it's a market darling. The management are absolute pigs. They are at the trough, just burning through cash like it's toilet paper, and it's really terrible. but it's a must own, and it's done well, and it will do well. So we make some exceptions. There aren't hard rules for us, but some mix of all of those elements is usually what we look for. And so far we've outperformed the URA by about 3.5 times, and that's pretty good for us.
Yeah, I'd say we haven't even really got going here. So I think that kind of underscores, or been going at this for a while. I don't want to take too much of your time, but
okay.
That kind of underscores things that, there's a difference between, this is like the segment that you've carved out, this niche where you and, you know, your team, this is what you talk about, this is what you do, this is what you cultivate. So that's how you're able to outperform by 3.5 times, you know, URA, you know, even in a market that really wasn't, you know, on fire yet. So this is what I would encourage people to think about. You know, you've mentioned a couple things. You know, if you kind of get the thesis, but you know, you have a job and little kids and you're trying to remodel your house and you want to take advantage of this, you know, that's why I tell people, you know, the ETFs are fine. Participate via the ETFs. You're not going to get burned. I mean, I would stay away from URA. I mean, there's two other ones, one in Canada and one, you know, people can look them up.
URNM and HURA.
Yeah. And so that's a good way to go. You're not going to, or you could just go buy the actual physical uranium. There's nothing wrong with that either. I mean, was buying gold when it was $300 an ounce. It's had a good CAGR for the last, you know, 20 years. So that's, you know, but if you really want to, I think you have a position in your portfolio where you're trying to generate real alpha and wealth. Then I think that if you don't have the time and the ability, then I think there are, I mean, I think you share the same view. I mean, I've seen all of since you started your publication, I don't like to call them newsletters. Let's call it research, you know, service, because newsletters have this sleazy connotation, which there's a lot of sleaze out there. Right. But I mean, results speak for themselves. I mean, there will be a time when the uranium bull market's over, and then, you know, there'll have to be a pivot or move on. I mean, it's not a perpetual bull ad infinitum on uranium. It's at some point it will not be in a bull market anymore. So, but I think, you know, if people have a portion of their funds that they want, that's the only way you have to go. You have to find somebody or find a service or find something that you can trust. And I'm not marketing this for you. I'm not getting any kickbacks, but I would recommend folks, if that's what they're interested in. I mean, that's kind of what you do. And I think, you know, the research is in depth, and that's the way to go. Otherwise, you know, if you're just going to go out there and you're a 9-to-5 guy and you think you're going to be able to figure all that out, I think you're going to have a hard time. I mean, I could just tell by some of the clues on like a couple of things, the companies you're talking about, but I don't even know all the companies you're talking about because I'm just a generalist myself. So this is kind of a chance for you to plug what you're doing. But like I said, I'm not marketing your service for you, but I think that since I've known you, which has been going on like over 3 years, I think, I mean, I think you've been at the forefront. I'm really, I can fully endorse what you're doing. I don't think you're sleazy, or I think people get real value in what I've seen. Just people commenting on, they think your service is terrific. So
thank you.
Feel
I appreciate that.
Free
yeah.
Any way you want, what you guys are doing and what you got going.
Yeah, thanks a lot. And congratulations to you as well on your publication. I think it's fantastic. I've had some big winners from you, and I know you've done really well with a lot of your positions too, uranium and oil and copper, and definitely have recommended you to a lot of people as well. Yeah, I mean, we basically put out a monthly newsletter that's really in depth. That's kind of the primary, our primary offering. We do a number of intra-month bulletins that go out as well via email that are more actionable. They have usually they're timely based on some market moving action or a company catalyst has some meaning to us as investors, that's more timely, it can't wait for the monthly letter, let's say. We usually send out, you know, 2 or 3 of those a month. Of course, it depends on the month. We have a focus list of 10 positions, like I mentioned. We are up about 350%, I think, since inception, which was 2 years ago. So we're really pleased with that. And then we're starting to do these live member only webinars. We did one about a month ago and had really, really good feedback from that. That was really nice because we can take questions directly from our members and go in depth speaking, which is so much faster than writing. And so we can get into the nitty gritty of the sector and get really detailed with that. So I think that's a nice value add that we've just started doing. And also just primarily, you know, like you said, it's a very complex sector, and it's very difficult to distill down what's going on in the sector into what that means to you as an investor. So that's our primary purpose, is to take all of the swirling information and try to help people make decisions on their investments without actually giving, you know, financial investment advice, but saying, this is what we're doing, this is what we recommend. and just trying to take all of that information and distill it down into something that's more easy to digest and understand, and what it means as an investor. And as you well know, it's just you can't get these outsized returns without that volatility. And so we got a lot of thank yous, because the first webinar that we did for our members was like right at the bottom. It was right at the, right, I think it was late July, even early August, a couple of weeks away from Sprott starting up. And we're getting a lot of member emails that were like, hey, what's going on? Everything's selling off. What's the deal? And we put out a bulletin that was called the Uranium Sector Gut Check. And we kind of went into the reasons why what we were seeing didn't worry us. It was coming down a low volume there. We weren't seeing redemptions from the ETFs, et cetera, et cetera. Spot was just around the corner. And then we did this webinar, and it really, especially now, since we're seeing these stock moves, it really feels good to know that we help some people hang on and not get shaken out. And now they're nicely up just over the course of even a few days, how quickly this can turn. So yeah, that's our primary offering. It's really been an awesome experience. Met so many great people, and it's a fun sector to be in, especially when things are going up. It's not so fun when they're going down, but in general, I think we're in maybe the second or third inning of probably a pretty good run here. So thanks for your kind words. I appreciate that, and it's been great to get some accolades from our members as well. We like that we've been able to help.
Outstanding. So it's right above your head, obviously, uraniuminsider.com, but where else? I know you're on Twitter. You're pretty active on Twitter also. Where can people find you if they want to follow you and get a flavor of what you're doing?
Sure. Yeah. Uraniuminsider.com is our website. There's a contact email there. If you're interested, we can send you a sample newsletter. Go ahead and send us an email through that contact form. And yeah, I'm pretty active on Twitter. I get a lot of direct messages. I do my best to respond to them when I have the time to do so, but there's a lot of good interaction just on the threads on Twitter. Twitter is a really cool resource for the most part. I don't always agree with the way that they do things, but there's a great community, an investing community, and in a lot of different sectors on there. So whatever your thing is, there's probably an investment community that you can find on Twitter. And that's been a great experience there for a few years now. Yeah, through Twitter or through the website.
Okay, great. Just to expand on that, I know we're winding down. I got another call I got to get on, but I keep telling people, get on Twitter and curate follow people. There's people out there. You'll find guys that are managing money, or smart people that are retired money managers, successful people in the business. And most of them, some of these people might only have a few hundred followers or 1,500, and you DM them and you get into this conversation. You're like, well, should I reach out to this guy? He probably won't respond. People are, pretty freely share information and are happy to discuss things. That's what I've found. And it's been a big help to me. I try to follow the Charlie Munger axiom, I can't invent it all myself, so take the best that I can from these other folks, and it helps generate ideas and then dialogue. It's been, you stay away from the politics and the ivermectin conversations. You probably focus on and focus on investments or investing in stuff. I think it could be, like you said, it's a tremendous tool. So anyways,
it really is.
Yeah,
it really is.
It's accelerated my learning exponentially.
100%. Yeah, you have kind of direct access to some real heavy hitters in the space, in any investing space. Not that you necessarily that they'll answer your direct message. Sometimes they do, and sometimes they don't. But you can interact through the threads, and you can, what I do. Have you ever used the Tweetdeck?
No.
So if you go to tweetdeck.twitter.com and log into your account, and you can set up this like horizontally scrolled screen where you have your homepage that's just your Twitter home thread, and then you can set certain accounts or certain hashtags, and it updates in real time just all across the screen.
Oh, wow.
It's a really, really cool resource. So I use that frequently. So obviously, the hashtag uranium, and then I've got my half dozen or so Twitter accounts that of just the really sharp people in the space, and whenever they post something, I see it right there. And you can also set notifications on the regular Twitter app, and set the alerts whenever somebody that you're following, posts something. And it's a great way to keep updated, and connect with people. So pretty much, I mean, almost everybody that I'm connected with now, that's kind of my inner circle of resources that now at this point, we all know each other. We have phone calls, and we meet, digitally pretty frequently, and speak over the phone. But, all these people I met on Twitter, or most of them. And so it's a really cool, really great investing space. Yeah.
Exactly.
Community. Yeah.
All right, man. Well, I appreciate you coming on. Like I said, we kind of lucked out that we just hit this when everything got hot. So this will be good I know folks like listening to you. And like I said, you've been getting a lot of success. I'm seeing you all over the place. I've always said that when I see you get interviewed on CNBC about uranium, I'm selling. That's when I'm hitting the bid. So I guess I need to figure out a way to just let me know. Just DM me when you get a CNBC invite, little insider information. But that'll be the time to bail, or even if you get on BNN. So anyways, it's coming, I know. So all right, man. Appreciate it. Continued success, and appreciate your time. Thank you.
Thanks so much. Yeah. Always good talking with you.
All right, great.